When it comes to investing, it can be confusing, frustrating, very difficult to understand initially, but that's like anything else in life. What's good, YouTube? I go by the name of Q. If you're unfamiliar, if you are familiar, shout out to you. Welcome back to the channel. What's most important, in my personal opinion, when it comes to getting started with investing is learning the lingo, getting really familiar with the vocabulary and acronyms, because that's one thing that used to confuse me and frustrate me all the time. But oddly enough, that's what helped me the most. That's what helped me the most. That was a great starting point for me. Like when I hear the words ticker symbol, I need to know what that means. I need to know that ticker symbol is nothing but an abbreviation of a company. For example, ticker symbol MCD. That's short for McDonald's. Ticker symbol AAPL. That's short for Apple. Ticker symbol NKE. Short for Nike. So forth and so on. There's a bunch of abbreviations, a bunch of numbers, and I get how scary that can be. A lot of charts, a lot of colors. That's enough to make your head spin. But the only way to get things to slow down is to take it one step at a time. Like anything else new in your life that you've never done before, gotta crawl before you walk. It's important to get the lingo down. Like I can't stress that enough. You need to know that a dividend is nothing but a portion of the profits that a company earns that they pay to their shareholders as an incentive of owning shares of that company. You also need to know that every company don't pay dividends. And the companies that do pay a dividend, they might only pay once a month, once a quarter, once or twice a year. That's important to know. That helped me out a lot, because when I learned that, my whole world changed. Everything started to slow down. And that's the point we want to get to. When things stop moving so fast and it slows down to the point of comprehension, that's the point we want to get to. Getting to that point is important because that allows you to create your investor profile. That allows you to identify what type of investor you are, or what type of investor you actually want to be. Do you want to be an active investor or a passive investor? Do you want to be somebody who's always looking at screens, who's always checking charts, who's always researching companies? Or do you want to be somebody who knows just enough where they can put a little bit of money in every single month and just go on about their life? That's a question you really have to ask yourself, because you don't want to get caught up in what the next person is doing when their goals and strategies may not align with what you want for your life. That's the whole point of investing. Identifying what you want your life to look like in the future based on the investment that you make today. A few more commonly used terms you'll hear is index or indices. I used to say indexes all the time until I got schooled by people who knew more than I did. They would say indexes. Do you mean indices? And I'm just like, fam, you know what I mean. You know what I mean. But index, you have the Dow Jones, right? The Dow, we've heard of that before. The Dow Jones Industrial Average. You have the NASDAQ Composite, and then you have the S&P 500, the Standard & Poor's 500. My mind was blown when I learned that the Dow Jones only have 30 companies traded on it. There's only 30 companies in the Dow Jones Industrial Average, and I never knew that. I didn't know that until last year. I promise you, I didn't know that, and when I learned that, that was good information for me. I kept that, and of those 30 companies, they're all large cap. There's another word, large cap or big cap, which is companies valued at over $10 billion or more. Fact check me on that, but I'm pretty sure large cap, 10 billion valuation or more. Standard & Poor's, the top 500 companies, and those are all indices, right? So then you have the term index fund. So whatever index fund you're investing in, each fund tracks an index or mirrors an index. There are multiple indexes or indices, but these are all important terms to know, and all things that I feel are super important to understand. Once you understand that, you'll be able to go further into your investment journey. There's thousands of people on the internet giving information about investing, including myself. That's why the disclaimers are so important. I'm not a financial advisor, I'm not a tax professional, and I'm definitely not an investing expert. I'm just someone who's sharing my story, right? The things that I know, the things that I learned in hopes of helping others. That's it, that's all. Everything that I share is stuff that I researched and stuff that I know about. I don't want to mislead anyone. That's not the goal. That's not the goal. I wouldn't be able to sleep at night knowing that someone went out and made a mistake based on something I said, then come back and blame me like, well, Q said do this or Q said do that. No. I wouldn't be able to sleep at night if I'm being honest, and Another thing, like this video is even difficult to make, if I'm being honest. It's difficult to share things, especially involving finance, where people may go out and do something, but the fear of being wrong, the fear of misleading someone, the fear of criticism from the outside world is nothing compared to my passion for wanting to educate people on finance, my passion of wanting to share my journey and help other people. That trumps that all day. And I gotta say this again, lingo, lingo, lingo. Understand it, learn it, know it like the back of your hand. Get so familiar with it that it becomes second nature to you. Practice the 10,000 hour rule by Malcolm Gladwell. If you're familiar with that, you know what I'm talking about. If not, I highly suggest you go research that. The head coach for University of Alabama, Nick Saban, he has a quote that I love, and he says, everybody thinks you practice something until you get it right. You really practice something until you can't get it wrong. Not only was that a bar, but that's just facts. Get so familiar with these words to the point where you hear them in conversations and you're able to pick it out like, oh, I know what that means. Oh, I know what that means, and you're not lost. It builds your investor confidence, trust me. With terms like SPACs, stonks, hodl, hold the line, diamond hands, tendies, etc., it's easy to get lost in that. But when you know the basics, when you know the basic lingo, it removes the intimidation and it gives you comfort. And hopefully this video helps you with that. I basically want to handhold anybody who's intimidated to get started with investing with this video and let you know that it's not as scary as it seems. I was once intimidated. I'm not anymore. And with the proper knowledge, the only thing that's on the other side of that fear is wealth. A few book recommendations I'll leave you with. These are books that helped me over the years, books that I've read from cover to cover or audiobooks that I've listened to. One is The Simple Path to Wealth by J.L. Collins. That's a really great read. I highly suggest that one. Two is Money Master the Game by Tony Robbins. That's also a great read. And the third one is The Intelligent Investor by Benjamin Graham. All fire and all really great reads. Like this video if you like it. Subscribe to my channel if you haven't. Follow me on IG, Q Makes It Happen, on Instagram. Leave me a comment down below and let me know if this video helped you in any way. I go by the name of Q, and like I always say, if Q can make it happen, you can make it happen. I'll holler at y'all next video. Peace.